How banks use your money against you. Ever wondered what really happens to your money when you deposit it in the bank? It's not just sitting there, it's being used against you. In this video, we'll expose the shocking truth about how banks profit from your hard-earned cash. Stay tuned. You won't look at your bank the same way again. The banking illusion. Have you ever wondered what happens to your money after you deposit it into your bank account? Most people believe their money just sits there, safe and sound, waiting for them to use it. But here's the shocking truth. Banks don't just hold your money. They use it to make profits, often in ways that work against your financial interests. In this video, we'll uncover the hidden tactics banks use to leverage your money, how these practices impact you, and what you can do to fight back. Chapter 1. Fractional Reserve Banking, the Hidden Money Machine. Banks don't keep all your money locked away in a vault. Instead, they use a system called fractional reserve banking. This system allows banks to lend out a significant portion of the deposits they receive, while only holding a fraction in reserve. For example, if you deposit $10,000 into your account, the bank might only keep $1,000 as reserves and lend out $9,000 to other customers. This creates money out of thin air and generates profits for the bank through interest, while your savings earn only a tiny fraction of that interest. Chapter 2. High-interest loans, profiting from your deposits. While banks pay you a negligible interest rate, often less than 1%, they lend your money to others at much higher rates. Credit cards, for example, often carry interest rates of 15% to 30%. This interest rate gap, known as the net interest margin, is how banks turn your money into their profits. Key examples. Credit cards. Banks lend your deposited money at 20% plus interest. Mortgages. They use your funds to issue home loans at 4% to 7%. Personal loans. Often have rates from 6% to 15%. While you earn pennies, banks make dollars. Chapter 3. Fees, and more fees. Banks also charge you for the privilege of using your own money. These fees might seem small individually but collectively add up to billions in profits. Common bank fees. Overdraft fees. Charges for spending more than your balance. Maintenance fees. Monthly charges for simply having an account. ATM fees. Costs associated with using non-bank ATMs. In 2022 alone, banks earned over $30 billion in overdraft fees in the U.S. Chapter 4. Investments and speculation, banks' secret business. Your money doesn't just sit idle. Banks invest it in various markets, including stock markets, bonds and government securities, real estate ventures. Banks often take significant risks with your deposits, sometimes contributing to financial crises, like the 2008 global financial meltdown, triggered partly by reckless bank lending practices. Chapter 5. Inflation in your savings, the silent thief. While your savings sit in a low-interest account, inflation gradually erodes its value. Banks benefit by lending at rates that often outpace inflation, while paying you less interest than inflation's impact on your money. Example. Inflation rate, 3%. Savings interest, 0.5%. Real value loss, 2.5% per year. Chapter 6. How you can fight back. Banks rely on your lack of awareness. Here's how you can take control. Switch to credit unions. They often provide better rates and lower fees. Invest wisely. Use your money in investments that outpace inflation. Use high-yield accounts. Some online banks offer significantly better interest rates. Educate yourself. Stay informed about financial practices and your options. Knowledge is power. Banks use your money against you, but now you know the game. Take action, stay informed, and make your money work for you, not for the banks. If you found this video eye-opening, don't forget to like, comment, and subscribe for more insights into how money really works. Now that you know how banks use your money to their advantage, it's time to take control of your finances. Don't forget to like, comment, and subscribe for more eye-opening financial insights. And remember, your money should work for you, not the banks.